Hello everyone, welcome back. I got some really good ones for you today. But first, I hope you had an awesome week and you have an awesome weekend as well. Happy Friday. Let's dive right in. Markets. The three major US stock indices actually getting beaten up quite nicely this morning. What's going on? Well, Jerome Powell gave his speech this morning at the Jackson Hole Symposium, came out a little more hawkish than I would say the markets and traders were anticipating. In my last video, I predicted that Jerome Powell was going to try to walk that tightrope, kind of thread that needle between acting too dovish and too hawkish, because he didn't want to act too hawkish with the economy in such a tricky spot right now, but he doesn't want to act too dovish because the dollar is also getting trashed, inflation's a problem, and fiat currencies are in a tricky spot right now. So I thought in my last video, I predicted Jerome Powell was going to just kind of lay low, especially because this time last year at the Jackson Hole Symposium, he said the inflation was going to be transitory and just totally blew out his credibility and was wrong on a bunch of calls. So I thought he was going to lay low this year, but he came in more hawkish than the markets are anticipating. This is a perfect example, in my opinion, of the Fed reaching for its, first blunt tool, which is managing those expectations just through your words, just through your rhetoric. Just talking about raising interest rates, try to let some of the air out of the tires in the equity bubbles just with your words. That way you don't ultimately have to follow through with policy. And I think we're seeing that because despite, those very hawkish keywords and for being a lewd and boring speech by Powell, the wording was pretty freaky, probably scared the algorithms quite a bit. But all things considered, he also reiterated that they're going to do one more, big hike, quote unquote. 75 basis points isn't big, just throwing that out there. But they're going to do one more big rate hike of 75 basis points at the next FOMC meeting. And then what? By December, we'll be cutting, taking some of these rate hikes off the table. He didn't say that, but he kind of alluded to becoming more dovish after front-loading some of these more aggressive rate hikes. And even if the Fed doesn't ultimately flip dove, getting the Fed funds rate up to only a paltry 4% by the end of next year is not going to stop inflation, and I think the market knows it. Why do I say the market isn't really buying into Powell's rhetoric, and the market knows ultimately we're either going to ease or inflation's just going to stick around regardless? Well, the debt market this morning, given Powell's hawkish rhetoric, barely reacting. The 10-year yield's stable, the dollar's stable. So I think risk assets, which are very sensitive to hawkish rhetoric, kind of doing their little, oh, what did he say? But the debt market ain't buying it, inflation ain't buying it, the dollar ain't buying it, the market participants ain't buying it, the public ain't buying it, the Fed's kind of lost a lot of their credibility already. And like I said, even if they do get up to 4%, it's not going to be enough to stop inflation. The way you stop inflation is you get your Fed funds rate above the inflation rate. So, we'll use their numbers. They said inflation for July was 6.3%. Okay, you need to raise the Fed funds rate to 6.4% to get into a positive interest rate. So you're going to need to raise the Fed funds rate to 6.4% next month. And you're only at what, 2.25 right now. So if Jerome Powell is serious about stopping inflation and fighting inflation, I would anticipate a 4% hike at the next meeting. It's not going to happen. It's not going to happen. They're going to do maybe a 0.4% hike, maybe a 25 basis point hike, maybe a 50 basis point hike, maybe a 75. Ooh, 75, getting Volcker worthy. But no way they're going to raise the Fed funds rate ever in your life above the inflation rate, effectively giving the dollar a positive value, effectively causing disinflation, then ultimately deflation and price stability. There's no way Fed Powell is ultimately going to deliver on all this hawkish rhetoric you're getting this morning. Market knows it. That's why you're only seeing a reaction in the really sensitive stock market and maybe like the crypto or gold market, but you're not really seeing that reaction in the yields. So crazy. Fed's just managing expectations right now using their number one blunt tool, which is baseless rhetoric. We'll see if they follow through. Maybe a 75 basis point at the next FOMC meeting. Okay, so expect a 75 basis point hike at the next meeting. 50 or 75, okay? It's going to be one or the other. We're not going to go 100 basis point, a full percent. That's not going to happen. And they're not going to come in at 25 basis points because that would just be too much of a baby bump. So I'd say at the next FOMC meeting, Fed's going to come in hot with 50 basis points, 75 basis point hike. And then these little baby bumps, if at all, he's promising you the baby bumps at least. We'll see about that. And even if he delivers on that and that Fed funds rate is 4%, by the end of next year, cool. Inflation next year is going to be another 8%. So, every year inflation goes up 5, 6, 7, 8, 9, 15%, and then they raise interest rates 1%. It does nothing. You would have to raise interest rates so much more aggressively to get inflation under control, and the Fed would also have to roll off its balance sheet so much more aggressively. They're doing neither of these things. So, sure, talk a big game, scare the markets with your promising to prioritize dollar strength over your beast system, but we all kind of know better. And I feel like the debt market ain't buying it at all. And then the stock market is just kind of having a little bit of like a, because the algorithms are reading these really lewd, boring words out of Powell, but he's saying things like, paying for the economy, paying for the middle class, bringing supply more and less in line with demand. He's talking about creating deflation, falling demand, disinflation, and so that just kind of freaks out those algorithms. But I think the market will wake up in like a few days from now and then realize, oh yeah, the Fed is totally never going to raise interest rates near what they say they're going to do. They never have, they never will, most likely. What else is new? Fed's talking about doing something they never get around to doing. I'm just going to inflate until I'm really convinced the Fed is going to deleverage the system. And then ultimately the Fed doesn't deleverage the system, and asset prices get even more inflated and more detached from the real economy. PE ratios go up even more. And then all those crash callers and deflationists and people wearing the dollar suspenders, they start to lose their minds that the Treasury is, acting out of control. The Fed's acting out of control. Everything's just getting blown out. The dollar's just getting totally decimated. And so they get mad, the crash callers and the deflationists, and then they try to slam a revolving door between Jerome Powell and Janet Yellen. Tell me how that's going to work. Janet Yellen, who runs the Treasury, the Secretary of Treasury, Janet Yellen, she trained Jerome Powell. Okay, she's a dove. Powell, who was raised by her, is a baby dove. So you got these doves and these baby doves, and then these crash callers want to come out and try to get mad and close the revolving door. And it just spins faster and faster and faster, and the asset prices just keep going up. And then, Fed Powell sees this, right? Like, we're really losing credibility here. So he goes out on the stage and he says things like, we mean it this time. And then the markets freak out for a day or two and then, ultimately forget about it. Focus on policy, see that the policy is actually engineering this inflation as opposed to stopping it. And the market just breathes for a minute, does the back of the envelope math on a 4% Fed funds rate against the backdrop of 15% inflation, comes to the conclusion that will leave real interest rates negative 11%, and then the markets just inflate 11% for that year. So it's kind of what you're getting. Fed's trying to let some air out of the tires for free, just with words. They don't have to actually do anything. And pat themselves on the back for what a great job they're doing on talking about cleaning up the mess they created. That's all I got for you for today. I still like risk assets, NASDAQ, Bitcoin, oil, gold. Not a dollar fan here. I could totally be wrong though, and I totally hope I am. I'd like to see the system deleverage, but hey, we've discussed it. All I got for you for right now. Like, subscribe, share, whatever. I got your back. I'll be back next time something weird happens or whenever I get a chance. Hope you have a wonderful weekend. Till next time.